Okay, improving continuous process improvement is the philosophy of continually improving employees, business processes, and products. So we don't want to be stagnant. We want to continue to improve. So the way we want to do this and the goal of continuous process improvement is to eliminate the source of problems in a process. So in this way, the right products are delivered in the right quantities at the right time. Inherent in each of the preceding management process is decision making. In managing a company, management has to make many decisions. And this is one of the really hard parts of being a manager because there is so many decisions. For example, in directing operations, managers have to decide on operating structure, training procedures, how are we going to train and how we're going to staff day-to-day operations. So let's take a look at this, and you can look at the bullets here. We tend to think of accountants as boring and dry. Everything's black and white. Everything has a right or wrong answer, but the truth is that they're actually instrumental in helping create a prosperous society. So they look at economic activity. They have to decide between a lot of decisions, most of which are gray and not necessarily black and white. They have to make judgments. They have to provide useful information so that the users, either the internal or the external people, can make good decisions and thereby will have a prosperous society. So this is very important in every society, not just the United States, but really in every society. Every society wants to be successful. So here are some of the ways that managerial accounting is used in some of the decisions. They have to look at all kinds of different reports and analyze so much information in order to make the right decision. So read over these bullets just so you can see the way that managerial accountants provide information for the managers. Here's an example exercise where you match the phase of the management process with the description to make sure that you understand these different phases. You definitely want to read back over what this process is and the different phases and highlight some keywords to help you remember. Check your answers with the answers below and just make sure you have an understanding of this. In this chapter, we're going to be looking at a company that makes guitars and the process of that and what types of cost we have. So here is where the customer is going to place the order and then gather the materials and then start cutting the materials, assembling it into the finished guitar. So we're going to look at this, and in the next few chapters we're going to learn even in more detail. In this chapter it's more of an overview with a lot of terminology. So we know what costs are. So costs are those things a company has to spend in order to earn revenue. So now in managerial accounting we're going to classify these differently to give us more useful information for managers. So first of all, we need to look at the different ways companies make money. And though this is not mentioned here, we need to understand that there are service companies and there are merchandise companies and there's manufacturing companies. So service company is going to provide some type of service. There's lots of examples of this. This could be a lawn care company. They're providing the service of lawn care. They're not selling a product, they're selling a service. Then you have merchandising companies. They sell merchandise, okay, like a clothing store. And then you have manufacturing companies, and they actually make the products they sell. So right now, this guitar company is going to be a manufacturing company, and they're going to have 3 types of inventory. But before we get to that, let's look at cost and a cost object. Costs are often classified by their relationship to a segment of operations. A cost object may be a product, sales territory, a department, or an activity such as research and development. The definition of a direct cost is that it can be traced directly to a cost object, such as the cost of wood to make the guitar is a direct cost because you can trace it back. So if I'm making a guitar, then I can directly trace the cost of the wood to the guitar. Wood's expensive enough. I know exactly how much I use on a guitar, especially right now. The cost of wood is even increased more. So let's just say I use a tiny slither of glue on the guitar. That's not enough money to worry about tracing it directly to that guitar. I mean, sure, I could say, okay, 1/5 of the bottle of glue and trace it like that, but that wouldn't be worth it. So that type of cost would be indirect. It cannot be easily or effectively traced to the cost object. So that would be a direct cost. An indirect cost. So here are direct costs of Legend guitars. So the materials would be direct costs, the wood, and then here is some indirect costs. So the supervisor is not necessarily actually putting his hands on the guitars. He's supervising the line. So he does he does oversee the production. So that is why he would be an indirect cost. So when you're classifying direct and indirect costs, you're going to identify the cost object and then determine if the cost can be identified with and traced to the cost object. So if it's traceable, then you're going to put it as direct cost. If it's not traceable, then it's going to be classified as indirect. So some of the costs, which are manufacturing costs, are costs that it takes to make the product. Converting the cost of converting the materials into a finished product. So the cost of a finished product is going to include direct materials, direct labor, and factory overhead. So here is a visual of those 3 things, and we're going to talk about what these are. Direct material costs must, in order for it to be classified as direct material, it has to be an integral part of the finished product and a significant portion of the total cost of the product. So examples of direct material costs for the guitar would be the wood, the electronic components for a television would be a direct material cost for a TV, silicone wafers for microcomputer chips, and tires for an automobile. Now the direct labor costs are going to be the people that are actually touching the guitar. Is the cost of labor for the employees that actually worked on that guitar. So if they're actually touching the guitar, then we pay them. What we pay them is going to be considered direct labor. And so here are some more examples of scenarios that would be direct labor costs. If it's not direct material and it's not direct labor, then it's going to be classified as factory overhead costs. Some call it manufacturing overhead or factory burden. They are indirect cost of the product. So the manufacturing overhead is everything indirect that we can't trace. We're going to put that all into what I call it manufacturing overhead. Indirect material, all the indirect labor, and any factoring costs that couldn't be traced, like indirect materials, indirect labor, factory rent, factory utilities, anything to do with the factory, factory insurance, those would all be manufacturing overhead costs. So here is a little bit more about manufacturing overhead costs. Okay, let me go look at, let me find the slide that had the image. Okay, here we go. Direct materials. Remember, this is where we're actually going to be creating the guitar, and it's enough to be traced to the guitar. Direct labor is going to be the people who are actually touching the guitar and making it. Okay, and it can be traced to the guitar. But the glue or anything else that's being used in the guitar would be factory overhead, or anything to do with the plant that the guitar is being made in. So here's a example exercise where you identify the cost as either direct material, direct labor, or factory overhead. And so practice that and see if you can get familiar with how to classify these costs. And then once you're done, check it, and then we'll continue. There's another way we can talk about costs, and that's prime and conversion. And you'll just want to memorize what prime is. So prime is going to be you can kind of think of it as prime as direct materials and direct labor. And conversion costs are made up of those costs that are direct labor and factory overhead. Conversion cost or cost of converting the material into a finished product. So notice that one of these costs fall under both prime and conversion, and that's direct labor. So prime is direct material and direct labor. Conversion costs are direct labor and manufacturing overhead. We only talk about this because sometimes managers will talk about the prime cost, or they'll talk about their conversion costs, and you want to know which costs they're talking about when they use those terms. So if you're a visual learner, this slide may help you understand it more and remember it more, so you may want to note that to your memory. And here's an example exercise for you to work to see if you understand the difference between prime and conversion costs.